So today we're going to be talking about if you're buying a house in a new home community. So this is a house where you get into contract and 6, 12, sometimes even 18 months later, the house is built, and at that point your loan closes and you move in, okay? So it can get really confusing because we call it new home construction. So people often assume that means that you're, buying the land and hiring a contractor. That's a different thing. This is like, if you're buying Orion Homes or any of the big ones, Toll Brothers, any of those, that's what we're talking about here. Now, what happens a lot is we'll have people come to us and they'll be like, well, the builder said if I use their lender, they're going to give me a couple $1,000s. So I'm going to do that. And I always go, wait a second, what are their fees? Well, I don't know. Well, what's their rate? I don't know. Well, how long can they lock you for? I don't know. Okay, guys, you cannot make a decision on if you're actually getting a real deal without that information. And something I'm seeing right now with builders, lenders, is they're not doing extended locks. So some do, some don't, but that's the biggest thing I think is going to come into play this year. So if, for instance, you're not closing till September, would I think that you should lock your loan now? Yeah, I do. I actually do. And the reason I think that is because the Fed's already saying that they're going to be doing 7 more hikes. Rates are going to be going up. So do you really want to wait until August to lock your rate? No, do an extended lock now so you don't have to worry about it. I have a gal I was talking to yesterday and I was like, oh my God, I'm so glad we locked you when we did, because we did an extended lock. I think it was 180 days because rates are way higher now. And she's like, yeah, me too. Okay. And that's something, if you're doing new home construction, you need to know if the lender can do. What type of extended lock options do they have and what does it cost? Okay, because there's always a cost to an extended lock, so you need to understand it. And if a lender just goes, well, I don't think we should lock till 30 days before. Whoa, in this market, like seriously, like I felt that way last year. I don't feel that way now. Like I think right now that's a little bit dangerous, and especially because what we're seeing is we're seeing homeowners affordability starting to max out. So if you qualify for, let's say, a new build in March or April, let's say April at 4%, God, I mean, rates have been between 4 and 5. So if you qualify, let's say at 5%, right? In April, but then in September, the house is done. And in August, the builder's lender's like, oh, we should lock, rates are 7%. Whoa, like where did your payment just go up to? I don't want that type of stress. Do you guys want that type of stress of wondering what your payment's gonna be in a rising rate environment? Now, am I saying rates are gonna be 7% in September? I have no idea. We didn't think they'd go this high this quick. So in a market like this, personally, I would be looking at extended lock options because I would want to make sure I can afford the payment, because the last thing you want to do is spend the next 6, 7, 8, 9, 10 months dreaming about your new house just to get almost to the finish line to find out, surprise, you don't qualify, or surprise, you qualify, but guess what? You're going to have to pay a truckload of points to get that rate down, or surprise, you qualify, but you can't stomach the payment. Okay, so number one, if the builder's lender is not willing to lock you until 30 or 60 days before close and that build is way off, run unless you like to gamble. If you want to gamble, cool, but you need to know that's what you're doing. Check out Mortgage News Daily, watch what's going on with rates. It is not fun. Like I've gotten whiplash a couple times now. I'm going to need a brace. Okay, so number one, the extended lock options. Number two, what are their fees? Right? Because sometimes people will be like, well, I'm getting a $3,000 credit. Cool, their fees are actually $5,000 more than your average lender. So you're not really getting a credit, you're just getting, bamboozled basically. And then they'll be like, oh, well, they don't have a fee. Cool, what's their rate? Oh, okay. Well, here's the other way they do it. So I was looking at one this morning, and the reason I'm doing this video is because I literally had 7 of these calls this week where it was like, hey, Jen, we're going to look at this builder's offering this, do you think it makes sense? And I'm like, will they lock the rate? No. Well, you can't tell anything if they won't lock the rate. It's not real. Nothing's real without a locked rate. So the other thing they can do is they're like, oh, well, they'll lock the rate. And then I look at the rate and I'm like, of course. So guess where that magical $3,000 is coming from? It's coming from a higher rate. And if you guys have seen my prior videos, you know rate sheets go in both ways. So there's basically par pricing, meaning we're not charging you money for the rate and we're not giving you money back. There's below market pricing where we charge you what's known as points. Okay, so like 1 point costs 1% of the loan amount to lower the rate, okay? So you buy points to lower the rate, and then above par is where you get lender credits. So if you're getting a lender credit, it's because you're taking a rate above the market. Okay, so that's something to watch out with these great incentives as well, is are you just getting a higher rate? Okay, because a lot of times you are. And some of the games we'll see is we'll see the builder quote a high rate. We had this last week where the builder like told the borrower, oh, this is the best I can get you. I'll never get you anything better. And it was like a full % higher than us. So we're like, okay, easy peasy, took the deal, locked it. Okay, the builder, after he tells him this, the builder goes, oh, you know what? We're gonna lower it a full % for you. They were just trying to see if they could shake him down. And when they couldn't shake him down, they just matched it. So, you know, I do think in this market, there is some level of matching going on because rates can reprice 4 times in a day, but that's not what I'm talking about here. What I'm talking about here is they were just trying to lock as high as they could to see what they could get away with. And then when they didn't, you know, they then matched the lender that was ethical and honest. So it's just stuff to watch out for because, you know, people are like, oh, well, it's a builder's lender, so it will be easier. I don't know, guys. Here's the thing. Like, the in-house builder lending companies, do a Google search on them. Check out the reviews of the loan officers. Like, if a big builder came to me and they said, hey, Jen, we love you. We want you to be our in-house lender. Would I say yes? Hell no. Hell no. Working for one builder? No way. That would cut my business down dramatically. Like, no way. No way. And that's the thing, is that the loan officers you're working with, they're loan officers, and I always joke, I call them indoor cats. They're hand-fed. Okay, so they're not like the alley cats like me that are out scrapping for business, making sure we're looking our best, doing our best, making sure the client's happy so that we get more business. They're inside being like, more kibble. Yum, 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 yum. So that's definitely different as well. You know, we do so many rescue deals, and maybe I'm just spicy today because it's frustrating. It's so frustrating because, you know, we'll have to get involved at the end, you know, because, oh, they don't know how to qualify VA. Okay, like, just have us do it from the start. Like, don't torture this borrower just like and try to sell them FHA. Just have them start with us from the beginning. But it's not the way it works. So it's really important for you guys to know that just because the builder says it's their preferred lender, it's not necessarily because they're amazing or great. It may just be because they own that company and that's the person that would take the job. So you've got that going on too. So overall, if you're thinking of going with the builder's lender, sometimes it can be great. More often than not, what I'm seeing right now is these credits, I can tear them apart 1 or 2 ways, or they're not even locking the client. And in a market like this, I don't think I would take that risk. If to gamble and, you know, see what happens with rates, go for it. But if you guys want to know that you're tucked up, safe and sound, that's when you call me. Thanks for watching. I hope you guys are well.